once you know that, you own a piece of the company, how do you value that stock? What makes it goes up and down? Understanding values and why stocks move is a lifetime of study, everybody. You've heard me say it. In the short run, the stock market acts like a spoiled child. One day it throws a tantrum and values of stocks could go much higher, much lower. On a day-to-day basis, emotions reign. These are erratic moves, and you cannot ever know what it's going to do day to day. But in the long run, stock prices go up when earnings for the prospects of earnings for companies go up, and they fall when the prospects are going to go down and earnings are going to go down.
And that's what we kind of saw in the first part of the first quarter was the reaction to earnings projections falling. And I think for the first quarter, earnings are supposed to be down about 7%.
Pretty bad, yes.
Year over year.
Mm-hmm. Yeah, it's not going to be good. It's not. Yeah. Now, you're going to, what's funny is you're going to hear all on the news, they beat expectations. They beat expectations. Mm-hmm. That's because the experts, quote-unquote experts, have beaten down the expectations so far.
And they always do that.
They do it every quarter.
Because they say the expectations for the full year earnings are X, right? Well, every quarter they do this where, for example, in the first quarter, when the quarter started, earnings expectations were a 1.2% growth, for 1.2% growth. And like you said, throughout the quarter, they lowered and lowered and lowered their expectations to where now they expect about a 7% drop in earnings. That's a pretty big difference.
That's a huge drop.
In just 3 months.
Yeah, huge drop. Huge. Yeah. I wrote about that in market commentary about that very same thing, and about the price-earnings ratio. The price of stocks are actually going up, even though the stock market itself is flat for the year, or a little bit down, depending on what you're reading, what index you're looking at.
But earnings are going to come out and say, they beat expectations.
Yep.
Well, if the expectations are going to be down, if you expected your earnings for the year to be down 7% and they were only down 5%,
what a great job!
What would you say? It was better than I expected, but you're still down 5%, right?
But should the stock price go up because of that?
Yeah, exactly.
That's really the question.
Yeah.
So what other questions do you have? You must have some, or maybe you're